Genting Malaysia's share price tumbled today on Budget 2019's move to hike gaming tax. The stock hit limit down during the course of the day, dropping 30% to RM3.18. It was the most actively traded stock on the bourse, with over 379 million shares traded. Genting Malaysia ended the day down 20.5% to RM3.61, the lowest it has closed over the past 52 weeks. In Budget 2019, Finance Minister Lim Guan Eng announced that the country would raise the annual casino license fee from RM120 million to RM150 million. Casino tax would be increased to 35% of gross income. CIMB research analyst Nigel Fu says the hike was a negative surprise as he had expected the hike to be smaller. In the afternoon, Bursa Malaysia suspended propriety day trading and intraday short selling of Genting for the rest of the day. Bursa says the PDT and IDSS activities will only resume on Wednesday, as the market will be closed tomorrow for the Deepavali holiday. MRCB George Ken, the JV between Malaysian Resources Corp and George Ken Malaysia, has bagged an RM11.86 billion contract for LRT3 stretching from Bandar Utama to Johan Setia. This price tag is even lower than the earlier figure of RM16.6 billion announced back in October. The contract includes a contingency or provisional sum of RM400 million, which, if not utilized, would reduce the contract sum. LRT3's current completion date is February 28, 2024. In addition, MRCB and George Kent are to provide a proportionate corporate guarantee to Prasarana Malaysia. Negotiations on the fixed-price contract would also continue so that the contract would be executed no later than December 12, 2018. Both companies said the contract would not have any significant effect on their respective earnings for their current financial year. However, they both expect it to contribute positively to their future earnings. Former Sabah Chief Minister Tan Sri Musa Aman has claimed trial to 35 charges of corruption over logging contracts. He pleaded not guilty. He claims that he was cleared of these charges 10 to 14 years ago. He was charged under Section 11, Subsection A of the Anti-Corruption Act 1997 for accepting gratification by agent. He had allegedly received a total of $63 million or RM243 million in Hong Kong and Singapore as an inducement for offering timber concessions in Sabah. The judge had requested for the bail to be fixed at RM5 million and for Musa to surrender all his passports. Musa was chief minister for 15 years, from 2003 until May 2018. He is currently the state assemblyman for Sungai Sibuga. Sarawak has proposed the largest budget in the state's history of RM11.9 billion for 2019. The state said that it would continue with its development bias and rural focus to further stimulate economic progress, according to Bernama. Chief Minister Dato' Patinggi Abang Johari Tun Openg says, out of the total budget, just over RM9 billion was for development, while RM2.8 million was for operating expenditure. He says that the proposed 2019 budget was expected to generate a surplus of RM122 million. Next year's development expenditure will take into account high-impact and people-centric projects, particularly in rural areas. On the 2019 federal budget, Abang Johari says the allocation for Sarawak of RM4.3 billion was only 7.94% of the total development budget. He says that it does not reflect a fair and equitable allocation to Sarawak, despite promises made by Pakatan Harapan that East Malaysia would get 30% of the federal allocation. PRG Holdings has inked a MOU with Singapore-based Capital World, a property developer listed on the Singapore Exchange. PRG will invest in Capital World by way of a capital injection in the form of new ordinary share subscription. Post the proposed investment, PRG will hold up to 29.9% in Capital World. Formerly known as TerraTech Group, Capital World is a property developer that enters JVs with landowners to minimize initial capital outlay. It is currently developing Project Capital City, an integrated property project along Jalan Tampoy in Johor Bahru. PRG Group MD Dato' Lua Chun Han said the proposed investment is part of the company's overall strategy to beef up its property development and construction division. PRG hopes to introduce medical and wellness elements into Project Capital City to enhance Capital World's product offering.